Good evening, all. I'm Epstein with your metal market wrap-up, and this wrap-up is for the evening of Wednesday, the 2nd of August, 2023. Didn't I just say yesterday August typically isn't a good month for the stock market in my financial market video? I didn't expect today the way it turned out, but I guess I'm on the right path with it. Now, let's understand a few things. There was a confluence of a lot of things going on. It's a big week, number one, for economic data. You have a lot of economic reports. Did you see the ADP report come out today? 300 and some odd thousand jobs again. And yes, they lowered their 497 to 455, but that's just a blow away from what we saw in the general sector. We get jobs data, if I'm right, Friday. That's coming out. Tomorrow morning, you're going to have the Bank of England give you its monetary policy. Markets widely expecting at least a quarter-point hike from them. And then we had the Fitch ratings, and then we had also the announcement of how much money Janet Yellen, the Treasury, Janet Yellen, needs in order to operate. And it's only going to be $1 trillion. That's more than the 700 million, which is an insane number to begin with. 700 billion, I said million. You throw these type of numbers around, what's a million, billion, trillion? That's what happens. You're crazy. And the biggest problem, and what Fitch did right, I want to defend them, right. We are dysfunctional. And this is a shot across the bow. I keep saying it, the politicians get nothing done. This is that shot. We cannot keep this debt going on. In all fairness, what I disagree with Fitch on is you had to do what you had to do during the pandemic to keep the golden goose going, which is called the U.S. economy. But now that it's going, you've got to pull strings back. It's not business as it was. The Biden administration, in all fairness, doesn't realize that. You can blame Trump for a lot of this. He got the tax cuts and other parts in, so they're not getting enough money in the Treasury. The way you get the budget deficit down is you got to either tax or you got to spend less. Could be a combination, but we're not doing it. We don't bite any bullet, and we're not going to. Why? There's a presidential election coming up, and it's suicide for the sitting president to go in and do anything in his mind that would accomplish that. He failed us in the energy market. Complete failure. Did you see today, again, the wisdom? That whole department should be fired, including the head of it. That now they can't buy the 6 million barrels they were going to. Of course they can't. You're at $79. You're no longer at the $67 that you had. So what does this do for the metal markets? Okay. The headwind, as I have repeatedly said here, you have inflation. That's not a headwind. You have core inflation that is sticky. That's not a headwind. You are taking down the headline. That doesn't pick up the gold. That takes out that part of the inflation, but it's really the core inflation around the world that you got to watch. And I've got to tell you, energy prices like this won't do anybody any good because it's a tax, it's inflationary, fuel prices are higher. Simple fact of life. But what about the metals? What's going on there? The easiest one is the copper market. It went up because Goldman Sachs came out with a call that China's going to do something very big in their real estate property markets and infrastructure. They are doing nothing. They are observers on a dance floor. They're looking at everybody dance in the center, but they're not going in. And I don't think they're going in at this point in time. And if they're not going in, well, what's going to be the catalyst? They're 50% of the market. We're seeing their orders slow down, that they export and import. That is not that bullish for it. The good part for copper is the supply is not large. That's easy. We then step over to the gold market. The headwind in the gold market isn't that difficult to understand. The headwind is a strong U.S. dollar, strong interest rates. When you get up where you're at a 4% rate, then you can lock that in for a 5-year period or a 5% rate or higher. Depends, are you buying U.S. treasuries? Are you buying corporate debt? Where are you? You got to say to yourself, why do I need to own gold? That becomes the problem. The other part is gold also looks at that inflation. So that's the prop. It's come up, but I've said to you, and if you followed me here, I have not been bullish. Let's take a look. The market was on its way up recently. I want to use that word very judiciously. Right through here. You and I take a look. This is July 14th. I'm not taking you far back. Today's August 2nd. The move was up, and as this was going, I know what I said in these videos. What I said is I thought the market now has to prove itself. Can it get up and through that 18-week average? It kept coming to it, and I know I used the word kiss. Is it going to kiss it and turn down, or can it get itself to get up and through it? It started rolling over last week, and this week the market has pulled back. So this particular attempt has not worked at this point in time. You have 2 days left. I don't see between all the data left and the jobs that you're going to take gold sharply higher. So I think that, time spent, okay, we're down here. We're not falling apart, but we certainly have a downside bias. When you take a look at the daily chart, you can see the actual one I put the swing line. This is without the swing line, same chart. I put the swing line, I'll bold it up a little bit. Lower highs in the red, lower lows. Wrong way to say it. Bearish. Market's under the 18-week average. But prior to that, I was telling you the battleground was the 18-week to the 100, maybe the Bollinger Band. And if it lets go, you got to look at the Bollinger Band underneath it and potentially the 200-day moving average, which is 1956. Even 1956 isn't an overall bad number. Where did we go today? If you don't learn Bollinger Bands, take a look in the mirror. Take your fist out, break the mirror with it, because you should learn what this means. You get up to them, be careful. That's where the pros are taking money off the table. You get down to them, that's where the pros are taking out the money off the table. And you always tie that with what? You've got to tie this with what this market is doing in the slow stochastic reading. It is beyond important, all right? It's one of the most important tools that I can see in the marketplace. And it's not a backward-looking tool. It's a forward-looking tool. Explanation. Here's the market. Let's go right over here. Let's go to July 31st. If the market breaks down, we can already see two potential supports, the black and the gray. If it breaks down, in order to break the bear trend, you got to get back over this particular number. The market then starts its break, gets to 1978.30, and today, here's where you go. Bingo, time to be out, all right? You're right at the numbers. Do you need to get proof that you're going to go down further and further in an oversold condition? You don't. You've pulled into the area, zone, number, whatever you want to call it, where that's where I think the pros are going to take money off the table. The gold-silver ratio. We have been dancing the dance where would silver pop through this number or not. So let's you and I take a look. This is July 31st. This is August gold, Sep silver. If you get over this number and stay there, it means that gold is getting stronger than silver. Why? Because what's happening is you'll need more ounces of silver, 82 of them, 84, 86, 88, to get 1 ounce of gold. Yesterday, the market gets over that number. Is it a fluke or is it going to hold? If it's not a fluke, you can get a pop, and the next resistance is in this area. It seems to be just what the market is trying to do. And in turn, the gold's already at the Bollinger Band for support. This is falling down to it, also oversold. In the copper market, I know repeatedly I said to you for 4 days, 5 days, ever since China came out and they were saying what they're going to do. They changed Tier 1 mortgages. They dropped 2 weeks ago 10 basis points interest rates. But what have they done? What have they done for the property developers? Where's the big money to get something going? They haven't done it. In anticipation that they would, and I get it, Goldman came out right through here and said, they're giving a higher number rating to copper. The public jumped on that. You went up, hit the Bollinger Band. I'm going to repeat. Do you understand how to work with these bands? That was the zone. The smart money's coming out. You're overbought against it. Could you keep going? Of course you could. Do you? Only 5% of the time. What do you think they built the Vegas Strip on? They didn't build it on the 5% of the time. They built it on the 95% that it's not going to go. In platinum, I don't care. You could be as bearish as you want. If you were next to me, you'd get an elbow just like that in your rib cage. You're short. Why aren't you taking money off the table? Okay? I don't care how low it goes. You play the percentage plays. You're still going to have losing trades. There is nobody that walks on water and doesn't lose. So you're always trying to make enough money to offset that loss. Does that sound familiar in your own account at some point? But you got to do the right things, whatever the word right means, over and over. And you don't go from your gut. You go from what the chart action, or what maybe it is your gut you trade off of. I don't know. But I know that up here in the dollar, now I'm not as bullish as I was. Not anywhere near it. In fact, if you were next to me, with the other elbow, I'll get you. And I'll say, you're overbought, you're at the upper band, you got a jobs report coming out. Where are you going? Maybe you can get up to the 103.09 area, but the easy money was made today. You put it together, you get yourself a game plan, and that's where my course comes in. It will stick with you. Your trading career. I get people, I got another email today, I should put those back in my testimonies, I think I will, as to the differences people are seeing as they're understanding what that does. On a Saturday afternoon, you can take the whole course, get it down, and you'll go, oh, I think I get this. You're going to get then access to me included in it for 2 weeks, the charting software you need, the videos. Can it be simpler? And it is inexpensive. Got it? How do you do this? Well, number one, you move your cursor at any point to the top up here. It'll take you to that area on the website. Look at this ad, pay attention, and I'll see you in the next videos. Welcome. I'm Epstein, and I'm here to talk about my enhanced Bollinger Band course. Now, many of you have taken my regular charting course, and if not, you might think you know something about Bollinger Bands. As you know, Bollinger Bands are an algorithm designed to keep the market trading within it 95% of the time. And on a chart, it will offer on the top part resistance, on the bottom support, and the idea is the market will travel within them. We know that sometimes it latches onto that band, goes up or goes down. Well, how do you play with that? Can you pyramid the positions off that type of thinking? Well, I've applied all three of these into 13 different videos that teach you my concept of it. And from that concept, you're able to work with weekly charts and or daily charts. The 13 videos, each about 7 minutes long. The idea here is not to put you in school forever, but to teach. Now, if you haven't tried my complete futures research, I throw that in as well. Whether you've tried this or not, I think it's worth taking a look at. I think you're going to learn something from there. That research, by the way, covers twice daily market updates for you and access to what I call window envelope numbers, which I think are very important when looking at these Bollinger Bands. The next part is a trial to our charting software so you can make your charts look the same way that mine do. It's that simple. Where do you go with it and how do you get all this? It's simple. You go to our website, www.iraepstein.com. If you go to the word education, everything you need is answered there. You can also call my staff. They'll be happy to help you get set up. I'm Ira Epstein, on the road to your education.